Hello. Who is there? Who is there? Who is there? Good evening, everyone. Hello, good evening, and thank you for joining us tonight. Let me know where you're joining from. Hello, hello, hello. Please share on your pages, share everywhere. Tell everyone that we're live. It's time for a session this evening. If you're online, please could you let me know where you're joining in from? Welcome, everyone. Welcome, welcome, welcome. Please, could you put in the comment section? Let's know where you're joining in from. If you're online, let's know where you're joining in from. Let's know. Please share with your families and friends. Let them know we are live right away. We have a serious business to deal with, and you don't want anyone to miss out of it. If you can hear me loud and clear, can you just type? Let's see. Where are my people? I'm not seeing anyone type in the comment section. Is it me that can't see the comment section? Oh, thank you, Kizito. Thank you. Joining from Cornwall. Thank you, Kizito. You're welcome. You're welcome. Please do it to share with your family and friends. Tell them there's an important and urgent session that's going on that they need to be a part of. Just share with your contacts, share with everyone you know, everyone that desires to have a house in the UK. I know it's like everyone's dream wish. Tell them to come and learn the know-how. Let's learn how to go about it. Thank you. If you're joining us, please can you put in the comment section where you're joining us from? Thank you. I'm still waiting. Shade is joining from Manchester. Welcome, Shade. Thank you for joining us. Thank you. Thank you. Welcome, Shade from Manchester. All right. So I'm sure other people, you're welcome. I'm sure other people will join us. We have a very important conversation tonight. And I have in the studio, Jessica is joining from Leeds. Good evening, Jessica. Like I said earlier, we have a very important conversation this evening. And we have in the studio wonderful and amazing people that are going to do justice to this topic. We just thought this is one hot topic. This is a burning desire in the hearts of people. I would just say, okay, let's just work something out. And we have two amazing guests that are going to do justice to that topic. So first, we'll be talking about insurance. I know most times when you hear insurance, you just think about car insurance, but there's more to insurance than just insuring your car. Like someone says, insurance is what you need that you don't know you need or something like that. Let me spoil that. All right. So, but insurance is a very, very important, it's something very important that we need to talk about. As Africans, we don't talk so much about it. And it's a vital aspect or vital conversation we need to have. We'll also be talking about mortgage. I know quite a number of people desire to have their own house, but just don't know how to go about it. Or probably you're like, oh, maybe until I spend 10, 20 years in the UK before I can own my own property. No, you don't have to spend that long to own your property. So we have someone in the building that will be sharing the secrets, everything you need to know how to get on the property ladder as soon as possible. So without further ado, I'm going to introduce our co-host for today in person of Tega. She's going to run us uh, through PSP profile. So just to mention, for those that are not members of PSP, this program is organized by Parents Supporting Parents in the UK. And Tega is going to do like a brief introduction of what we do in PSP. And if you would like to be a part of us, there will be an opportunity for you to join us. So please still put in the comment section where you're joining in from. I hand over to Tega.
Hello, hello, hello. Good evening, everyone. Awesome. Awesome. Good to have you all here. It's my pleasure to be co-hosting today. Thank you so much, Atinuke, for this opportunity. And thank you to PSP in UK. This is an amazing family that I have been opportuned to be part of. And this is an express invitation. So if you're in the UK and you're a parent, this is a community that you want to belong to. The vision of PSP in UK is to empower Nigerian parents in the UK to thrive in a very diverse society, especially for those of us who just migrated or relocated, or even those of us who have already been here for quite some time. What the focus of this community is to support each other and to work with each other to raise strong families. Our mission is to provide a supportive and inclusive environment where every Nigerian parent in the UK, you can come in here, share your experiences. We also share resources and access resources from each other, build a very strong network. PSP in the UK, I will tell you free of charge from experience, is very, very focused on promoting mutual learning and also helping each and every one of us develop holistically for ourselves and for our families. We do this through collaboration and advocacy. Just like what we're having tonight, it is a collaboration to teach. We aim at equipping every Nigerian parent who comes in here with tools and knowledge to be able to navigate the challenges of parenting in a new country, as well as to create a meaningful and fulfilling life for themselves and their children in the UK. Currently, PSP in the UK is at over 700 members, and we are growing. So if you are not yet a part of the community, please use this opportunity to plug in and you'd get a whole lot of value here. So our values are hinged on respect, mutual respect, empathy, mutual support, education, advocacy, and community engagement. We've had quite a number of webinars in the year 2024, and so many more are loading this year. Some of the things that we've looked at in 2024 have been, we've looked at raising girls, we've looked at the English education system, trying to understand how it works. We've also looked at building a strong financial education in the UK. We've also talked about, had a webinar around safeguarding and childcare issues in the UK. So you can see there's so much to learn. For the year 2025, we have, this is actually our fourth session this year already. And we've talked about tech, and today we're talking about insurance, mortgages. That's our focus for today. We have other activities within the community, which include intercessory prayers, which holds every Tuesday by 9 p.m. We also have a Bible club, which holds every Wednesday by 6 p.m. and it is online. We also do have monthly prayer meetings every last Friday of the month. And every month a webinar must take place, and that's where you learn so much. We have other activities that are coming up this year, which include a charity project, as well as a summer hangout, which will be in August 2025. Yay! Looking forward to that. So if you intend, or if you are interested in partnering or collaborating with us, the numbers are there on the screen. These are the people to reach out to. We have Atinuke, Fumi, Mrs. D, Uduak, and Dr. Joy. You can also send an email to pspiuk247@gmail.com. Also, please hit the subscribe and follow button so that you could get alerts at any time we're doing webinars. And you can also check out what we've done in the past. Just like, share, and subscribe to this channel. Thank you so, so much. We are hoping that you would have a fantastic time today. So what you have on your screen, you have a QR code that you could quickly scan, and this will only work if you have a UK line. So please don't try to use your Nigerian line to scan this. You can only join this group with your UK line. So kindly scan the code on your screen right now, and you'll be taken directly to join our group here in the UK. Thank you so, so much. This is PSP in the UK. Looking forward to have you. So tonight, we're going to be talking on insurance and mortgages, the importance of insurance and mortgages in the UK. And we have two amazing speakers. Thank you so much for giving us your time today. And first and foremost, we're going to kick off with Mr. Abiodun Oyinlola. He is a seasoned, when I say seasoned, I mean he is a seasoned insurance practitioner. He's a seasoned financial advisor, and he has been in the insurance sector for a number of years, well, close to or over 20 years, if I'm not correct. I am going to hand over to you, Mr. Abiodun. Thank you so much, sir.
Yeah, thank you so much, Sega. And good evening, everybody. Thank you so much for this opportunity. I do not take it for granted at all. And I want to actually commend this group for what you are doing. Something happened very, very recently. I wish the family are member of this group. What happened to them would not have happened. In Leeds last week, a family lost the breadwinner. And when they asked the wife if they have life insurance, unfortunately, they said, and I quote, they've never heard anything like that. So I really, really commend this organization. And I really want you to go far and far by the grace of God. Yes, just like Sega said, Abiodun Oyinlola is my name. By God's grace, I am a UK trained chartered insurance practitioner for over 38 years. And I also have a master's degree in business admin. Because of our time, these are my profile. I've held several positions as the CEO of companies, but currently I represent Tavistock Protect. We are the biggest insurance broker in the whole of UK, and we are the best. Yes, let's go straight to the topic of today. I know the time is not, we don't have enough time. So today we are going to look at this important program. But before we do that, let's watch this video. It's just about 2 minutes video. Happy listening.
I would describe my growing up as comfortable middle class. My dad was a contractor and my mom was a nursing tech.
Everybody that met Dee, they just automatically loved her, and she had such a big, giving and loving heart. Tex was artistic. He loved music.
When Dee and Tex were together, they had an absolute wonderful time.
My parents divorced when I was 5, but it didn't really make a difference because they were still close and stuff.
A lot of people didn't believe they were divorced. They were always there for each other. And they were always there for the children as well.
My mom got diagnosed with ovarian cancer, stage 4, a couple of days before I turned 13. I went back to the hospital and I saw my mom, and we just both started crying.
When she found out that she had cancer, she would tell me, she said, Mom, you know, I could say why me, but why not me? trouble falls on everyone.
Dee had health insurance and life insurance, but she had to choose which insurance she had to let go, and she chose to keep the health insurance because she knew where her expenses were going to be.
They didn't expect her to live because when you're diagnosed with stage 4 ovarian cancer, most people are gone within a year. But Dee Dee was a fighter, and she lived 5 years after her diagnosis.
My dad was diagnosed with esophageal cancer, December of '08.
We all really realized the seriousness of both of the illnesses, for Dee and for Tex. Our biggest concern was for Previs and Yasmin.
When I found out that my father had cancer, I was locked up. And my mother didn't want to tell me because she didn't want me worrying while I was in jail.
Tex died in April, and Dee was gone 3 months later.
After my parents died, there was no life insurance. Things were hard.
Had they had life insurance, both Tex and Dee, things would have been a lot different for her children. Although Yasmin is a strong young lady, you could see the hurt, but she kept persevering, knowing that her goal was to finish high school and ultimately go to college. As far as Previs is concerned, because of the fact that he's been in trouble, it's hard for him to find a job.
If my mom and dad had life insurance, our life would be dramatically different. I mean, I just live day by day, really, with trying to just make it.
My senior year, I was going to school and I was working with Miss Wanda to help prepare for my senior expenses. I would go in there 12. Sometimes I wouldn't get off till about 9, 10. Fridays we didn't leave till about 12 most of the time.
Life insurance is probably one of the most important things you can do with your life. You don't really know which problems you leave behind on your children's life, because life changes for everybody after you're gone.
We're not here forever, and there's always going to be a need for whoever is left behind to have that life insurance.
Yeah, without wasting our time, thank you for listening. We want to go into the presentation now. And we are looking at the importance of insurance in the UK. And we are going to pay particular attention to family protection plan. Now, let me emphasize here the notion, or should I say the experience we've got in our various countries, I mean, Nigeria and other African countries, regarding insurance is quite different here in UK. Insurance works here in UK. And like somebody said anybody that lives in UK and they do not have life insurance, that person is a fool. Now, so we are going to look at the importance of having life insurance or insurance generally in UK. The next slide, please. Hello? Okay. Yes, we understand that insurance can be often very, very difficult. Sometimes it could be mystery, and there is so much complexity, leaving us with the question, how does it work? Okay. How does it work? What benefit does it offer? And how does one go in selecting the most suitable insurance coverage? Right. So what is insurance to start with? Insurance is a contractual agreement between individual, you and I, or a business entity, let's say Mark and Spencer, and an insurance firm, aimed at providing financial protection and mitigating risks associated with specific situation and event. Insurance is a financial safety net that helps you and your loved ones recover after something bad and unforeseen has happened, such as fire, theft, car accident, death, job loss, or critical illness, and so on. It is a fact that this society especially hardly can function without insurance. There'll be so much uncertainty. Imagine if we are allowed to put our car on the road without insurance. What happens if we hit somebody and dies and we don't have money? So insurance, no society can, or should I say this society cannot survive without insurance. It is so amazing. Even the road that we walk on or drive on, everything is insured. Then there are so many. Another thing is it will be very difficult to obtain credit or financing without having insurance, because the lenders will be reluctant to give us credits of finance. Now, when somebody purchases an insurance contract, that person receives a policy document. The policy document in itself is not the insurance, but it is an evidence of the existence of a contract. Now, let's talk about different types of protection. Like I said, our focus today will, although it was going to be on life and critical illness and income protection and the rest, but let's just look at the different policy we can use to protect our family. The first of them is life insurance. Just like, what is life insurance? Life insurance is just a policy that promises to pay a lump sum in the event of untimely death. So some people sometimes will say, how can you insure your life? I think there is a misunderstanding of that word life insurance. What life insurance does is, what you are insuring is the financial consequence of your untimely death. Let's assume that I died suddenly. Of course, without having life insurance, my family, the financial consequence on my family will be so devastating. And somebody has said lately, any family that do not have life insurance, in the event of the demise of any of the breadwinner, what they've got is double tragedy. What do we mean by that? That was it. It's tragedy enough to have lost a loved one, but it's also tragedy facing the financial consequence. Then we have a policy we call critical illness. Critical illness is that policy that pays a lump sum in the event of being diagnosed with any of the illnesses listed in the policy. And such illnesses could be cancer, stroke, heart attack, dementia, kidney failure. That is where critical illness comes in. It pays a lump sum so that the individual diagnosed will not be faced with two troubles: how to recover, then how to meet up financially. This is where this kind of policy is very, very crucial. Now, there are so many benefits of critical illness, but because of our time, that's why I just summarized that. But when a client has critical illness, It is also possible for the client to extend that cover to all his children or all their children as a couple. The children are covered from the age, sometime from the womb, before they were born, up to age 22. And depending on the type of contract, but the minimum cover each child will be entitled to could be as high as 50,000. Now, there is another policy we call income protection. Income protection is the policy that pays our income in the event that we are not able to work due to a sickness or accident. This especially applies to people who are self-employed, locum nurse, locum doctors, self-employed doctors. Yes, most people go locum because they get more pay. And the only thing they are missing out is the sick pay. So for all those that are self-employed, it is always advisable that they have a policy in place whereby in the event that they are not able to work due to sickness or accidents, that will not affect their income. I have a client in Peterborough. She had this income protection in December. She was on the motorway and a lorry from Germany just lost control, smashed her with the car. They had to call fire brigade to bring her out of the car. Now she's not unable to work, but thank God she has this policy we call income protection. In the next 12 months, her income is guaranteed. So she can now focus on recovery. Now, as we all know, because of the pressure on our NHS now, there is a growing popularity of a policy we call private medical insurance. We know that so many people have died in UK while waiting on the waiting list. For people who have private medical insurance, they don't have to join the queue. They just go straight away to see a consultant, and they are treated as quickly as possible. Now, for another good policy that we need to talk about, especially now that we are talking about having our homes, mortgage, is a mortgage protection insurance. The policy aims at paying off the mortgage in the event of death, so that in the event of death, the the mortgage is not repossessed by the banks. Now, we also have a policy we call building and content insurance. That is the kind of insurance that protects the physical structure of the building and the content and all the precious things in the building. Now, for those that have a business enterprise, yes, they also need to cover their insurance under commercial insurance, such like public liability, their liabilities to the public. And of course, part of the insurance is also has to do with retirement plan. Now, so moving forward now, the next question now is, how much will it cost to have life insurance and critical illness in place? The good thing about having life insurance, about the cost, is that for those of us that are mobile, we know we pay so much to cover our car insurance. But the good news is that you don't pay that much to provide for your loved ones. In October 2022, I visited a family in Blackpool and advised them to have life insurance in place. And they were wise to have done so. The man, at the age of 56 last year, he did the insurance for less than 2 years. December last year, he suddenly passed, leaving the poor wife with 5 children. And guess what? Within 20 days or thereabouts, the widow, the wife, collected huge payouts. And I remember that morning when she gave me a call. She said, how will it have been if this policy was not done? So insurance, life insurance and critical illness doesn't cost much. However, these are the things that determines the price of life insurance. The smokers, our smoking status. Smokers pay more than non-smoker. The amount of cover we want also determine how much we are going to be paying every month, and the length of cover. Our health issue or our lifestyle is also relevant to the cost, and of course our job, our occupation. Some jobs, the occupations are more riskier, are riskier than the other. Now, the next question again we want to answer now is that, what is the best way of buying insurance? Ladies and gentlemen, I want to say today that the very, very best way to buy insurance is to go through an insurance advisor. Why? One of the reasons is because when you don't go through an advisor, you'll be paying more. But when you go through an advisor, you'll be paying less. Not only that, any insurance contract done without using a broker, such insurance in the insurance policy is termed unadvised sales, which means the client do not even know what they have bought, and they don't even know what they are paying for. But when you go through a broker, you understand exactly what you are paying for, and yet you pay less. The big question again is this: how much does it cost to go through an insurance broker or an insurance advisor? It doesn't cost you anything, and yet you stand the benefit of getting the best advice, the cheaper insurance, and in the event of claim, the broker will be there for you. And guess what? Again, I want to emphasize that it doesn't cost you anything to use an insurance agent or broker, as the case may be. Now, having done insurance, let's assume Mr. A and Mrs. B, they have got their life insurance in place. Is that the end of the road? The answer is no. By the grace of God, I've been into so many events, so many churches over these years, over 38 years, to hold seminar about life insurance. And I can tell you that 90% of people, even right now in UK, who have life insurance in place, about 90% do not know that they need to put their policy, their life policy in trust. Now, because of our time, let me just summarize what it means, putting life insurance in trust. What it simply means is that, what is a trust to start with? A trust is just a legal document whereby you state your wish, your desire on how the proceeds of your policy should be distributed among your beneficiaries. Now, the advantage of putting your policy in trust it ensures that the proceeds from the life insurance goes to the right people, right people. Secondly, the claim will be paid faster because you have put your policy in trust. If you don't put your policy in trust, this is what happens. When somebody dies in UK, the government will usually set up what we call a probate to look into the affairs of the deceased person. Amongst others, the duties of probate is to get together the deceased person's assets and liability. Now, this process takes a minimum of 6 months in UK. And life insurance is also part of the deceased assets. Now, the only way by which you can take your life insurance cover out of the reach of the probate is by putting that policy in trust. So which means the probate will not have anything to do with the life insurance. So the life insurance company can pay quickly directly to your dependents. Now, the third advantage is such payments from your insurance company should attract what we call inheritance tax. Take, for example, in the event of my death, and my children want to inherit the payouts on my life insurance, they are supposed to pay a tax. We call it inheritance tax on it. The inheritance tax can be as high as 40%. Ladies and gentlemen, once a client puts his or her policy in trust, the government will not have any right to take inheritance tax from that payout. Now, the big question is this: how much will it take to put life policy in trust? The wonderful answer that will sound like music into your ears is that it costs you nothing. Absolutely nothing. Then if it does cost nothing, then how come many people don't know about it? The reason why many people don't know about it is because to start with, when they were purchasing their life insurance, they did not go through a qualified insurance professional who is authorized to advise on trust. Now, there are so many types of trust, and this is where you need the help of an advisor who is authorized. We have one of the types of trust is the one we call absolute trust. Absolute trust is a trust that once it's set up, you cannot alter it. And that is very ridiculous because we all know that the only constant thing in life is change. So that type of trust is not ideal in most situations. And this is where you need the advice of an authorized person. Then we have another one we call discretionary trust. That is the most, or let's say that is the best trust to have. Why? Because that one is subject to change or changes, as the case may be. And again, like we all know, the only constant thing in life is change. So that policy means the reality of life. I'm humbled to say that by the grace of God, myself and our lovely Sega, one of your members, we are authorized to advise you on the trust. And so, again, I want to emphasize again that going through an insurance broker or an insurance advisor, as the case may be, to buy your life insurance gives you peace of mind. To start with, you know exactly what you've got, what you are paying for. Two, the advisor will also address the issue of trust so that your cover is solidly completed. And again, everything comes at no price at all. Everything is absolutely free. Now, because life insurance has to be arranged in line with each individual needs or individual family's need. So when you go through an insurance broker, we are able to tailor your insurance in line with your needs. Now, I want to give you real life stories, and I honestly want us to take this very, very seriously. And sometimes when I'm talking to people about having life insurance, I'm usually so emotional because over these years, I've seen families, just like we saw in that video, who are going through hardship just simply because the breadwinner, the parents especially, do not do what they are supposed to do that will not affect their budgets. 2 weeks ago, I went to see a couple. While we were talking about the cost, I gave them the quotes, and the wife, typical our women, they are good managers of resources. And, sometimes when you want to go to the market with your wife, oh my goodness, as men, you get to a stage where you feel irritated. Our women want to price things over and over again, but that's how God made them. God bless them. Now, the wife, coming back to my story, the wife was saying, oh, but this amount is so high relatively. And the husband said, what are you talking about? Do you know how much we pay for our car insurance? So like I said, to give our family, our children, a solid future, it doesn't cost us much. Imagine, oh my goodness, imagine the financial consequence of having to lose a breadwinner in the family. Yes, it's happened. Like I said, this family, so many families, a family here in Southeastern took life insurance, was to be paying £20 every month. This man died having paid just one single £20, and the wife collected 200,000. Ladies and gentlemen, I wish we have the whole day, but please get in touch with us. We'll be able to sit down with you and provide a tailor-made life insurance for you. God bless you. Thanks for listening. Thank you.
Thank you so much, sir. Thank you. What a powerful presentation. I'm sure we've heard that. If you have any question, please feel free to drop in the comment section. In the comment section, please. We'll take all the questions at the end. Thank you so much for that beautiful presentation, sir. So we'll move over to Mr. Ken, who is going to talk to us about mortgage. Like I said, please, if you have any question, feel free to put in the comment section. I'm sure you've heard to think that with as little as £20, you can actually have a life insurance policy for your family. Mr. Ken would be taking us on mortgage, and I'm going to leave the stage for him.
Thank you so much for having me here today. And I'm privileged and honored to speak to you all about mortgages. So my full name is Kenneth Oboko Achampong, and I've been CIMA qualified, which is the mortgage qualification you need, since 2007. And prior to that, I used to work in the banking industry, and I've actually worked as a mortgage broker in the banking industry, Halifax, Lloyds, Barclays, before I actually went independent. So I'm actually an independent broker, and most independent brokers work through networks. My network name is called Stonebridge. So Stonebridge Limited is my network name, where we have thousands of brokers working for, well, we don't work for Stonebridge, but we use their platform to do our mortgages. Okay, so you know a bit more about myself now. As I mentioned, started since 2007, being in the mortgage industry all this while. Well, that's what, 18 years. Yeah, it just feels like yesterday because I enjoy the work I do. I am happy to see people get onto the property ladder, especially families. I can see the excitement on their faces when they get their mortgages. So it gives me that satisfaction that I've done my job really, really well. So if we go straight into mortgages, well, one would probably ask, what is a mortgage? I mean, if you think about it, what is actually a mortgage? It's a really heavy word, and at times we make it sound as if it's something that is so complicated, complex, and some people say to you, "Oh, you're going to be taking a mortgage. Your life is going to stop." Blah blah blah. No, it's essentially a loan. It's essentially a loan. It's just that it's probably the largest loan you would ever take. Most people, the largest loan they would ever take in their lifetime is a mortgage. And that can feel very, very intimidating if, especially you're a first timer and you haven't got someone to hold your hand throughout this mortgage journey. So in doing this, you probably have to ask yourself so many questions, or you want someone to ask these questions, or so you want someone to answer these questions for you. Then that is where a broker comes in. So traditionally, people would go to their banks and then speak to the bank manager, and then they would look at the accounts and arrange a mortgage for them. But times have moved on, the system has changed now. Now you need a mortgage broker who is independent, so they've got access to the whole of the markets. Some brokers do have access to some of the markets, not the whole of the markets. I do have access to the whole of the market. So it helps you to be able to get the right advice, and knowing very well that whatever product would be recommended for you would be a product that was best suits your needs, taking into consideration your circumstances as well. Okay, so if we were saying to me as a first-time buyer, you were discussing with your family, saying, look, I want to take out a mortgage. Where do you actually start? Okay, and what sort of conversations do you want to have with your mortgage broker? So first of all, you would want to know essentially how much you want to borrow. That is very, very important. Without knowing how much you want to borrow, you won't even know whether you're looking at what, a 2-bedroom flat, 3-bedroom house, a maisonette, a detached house, whatever. You could. I've seen people who have wanted to buy properties that they can't afford. They just go online and they're looking, oh, this one is really nice, that one is really nice. But then sitting down with a broker, they realize that, oh, hold on, I might probably not be able to afford this property. And there's been times where people think that, oh, you know what, I'm not able to afford this property because I've been told that a mortgage is so hard to get. But we sit down and then they're actually surprised that the income and outgoings means that mortgage is affordable and they'll be able to get on the property ladder. So first of all, the most important thing that you need is an agreement or a decision in principle. So a mortgage agreement or decision in principle is just telling you that in principle, the lender would be able to lend you X or Y amount of mortgage if you took out this mortgage. What you cannot do, at times I hear people asking me, is that you cannot get a mortgage without a property, because the mortgage itself is a loan, but it's secured on the property. So the property is the collateral for this loan you are taking. So unlike a personal loan, you go to the bank, you say, oh, I need a personal loan. What for? Well, I need it for, let's say, a car, or I need it for a holiday, wedding, whatever. You get handed money and then no questions asked. You take your money, whatever you want to do with it, you do with it. If you're unable to pay, they start writing to you and then they start demanding that you pay the money. But in terms of a mortgage, you have taken this house, you've taken this amount of money to buy a property. And this property is standing as the collateral. So if you're not able to pay, then the lender would come for the property that you use the money to buy. So the lender would always 100% have a charge on this property. You go to land registry, your name is on there, Mr. XYZ, but then you would realize that a lender, let's say Nationwide, Halifax, or whatever, they would also have their interest in the property, because essentially they've also given you part of the money to pay for this property. So they would have an interest in the property as well. Okay, so moving on, what do we need to get an agreement in principle? First of all, you need your income, you need proof of ID, identity, proof of address, really, really important. These things, very, very important: ID, income, address, and one other thing is your outgoings, which means that we would need to see your credit report. So if you're thinking of buying a property, ensure that you maintain a very good credit. And I'm going to be expanding on that later on, how a credit works. So if you're employed, it's straightforward. We look at your pay slips, blah, 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 including your P60, and then we put it on the side. We look at your ID. A lot of people might be asking, do I need to be British, or do I need to have indefinite leave to remain to be able to get a mortgage? The answer is a big no. You don't have to have indefinite leave to remain or be a British citizen to be able to get a mortgage in UK. So long as you have a visa which hasn't expired and you've lived in this country for at least 1 year, there are lenders, a handful of them though, who would be able to do business with you. Again, every individual circumstance is different, so you would have to speak to a broker to be able to assess your situation. So we've got the income for employed people. For self-employed people, you always have to do your tax assessments. I've actually had interaction with self-employed people, and it's actually difficult for them to actually declare income, as in income they earn. Most people, so when you're self-employed, they feel like, look, I'm on my own, so I've got to make sure that I take as much deductions as possible, and then I declare as little as possible. That is fine, but when it comes to doing mortgage, then you realize that you'll be stuck in terms of proving that you can actually afford a mortgage. So with self-employed people, we look at your net profit and not the turnover. So if your company is doing a lot of business, it could be a limited company, it could be a partnership, it could be a sole trader, you're getting turnover, lots of them, but you're declaring a profit of minimal value, then you should know that when it comes to you taking out a mortgage, you will be stuck. So if you're thinking of taking out a mortgage, please speak to your accountant. Most accountants have a working knowledge of how mortgage works, and they'll be able to advise you as to what to get, or some of them might actually even tell you, speak to a broker, let me know how much you need to be able to buy what, then I'll be able to work your self-assessment based on that figure. I think that is very clear. And in terms of ID, like I said, it's usually your passport, driver's license, if it's UK one, and then there are other documents that we can take if you don't have these two. I can't go through all the documents, but if you happen to be in such a situation, please speak to a broker and they will be able to advise you accordingly. So once you've got these two, ID and then your income, then we talk about your outgoing. So we've talked about what is coming in, which is your income. Now we need to determine what is going out. That is very key as well. I've got times I get people, couples, individuals who are earning so much money, but then their commitments are so huge. Some of them paying car loans for £700, 800, and other loans, credit cards, and all of that. And then you realize that you've got a lot of income coming in. However, when we do the affordability assessments, you're left with little to buy your dream house. So it means that you have to shed some of these things. So I would always advise, if you're looking to get a mortgage in the future, probably a year or two, speak to a broker now. Speak to a broker now so that you'll be able to put things right before you get there. Okay, so once we've got all these documents in place, then I would be the broker or myself, I'll be able to do something we call an affordability assessment first. So we do an affordability assessment and then we gauge to see how much roughly you'll be able to borrow. And then if we know that, okay, based on the assessment we've done, you said you need £200,000 to buy a property because the property is, let's say, 250, whatever, then we'll be able to complete a decision in principle for you. In terms of how much you put down, so decision in principle too comes with how much you put down. So you're probably, the next question would be, how much am I supposed to put down for a decision if I was to get a mortgage in terms of deposit? So the deposit ranges from 5% all the way to any amount that you can actually afford. So 5, 10, 15, 20 of the property value. So once we determine, I tell you how much you'll be able to borrow, then we talk about how much potentially you'll be able to put down and then get this property that you want. So this what I'm actually talking about is mainly geared towards first-time buyers. There are other applicants who I might not be able to cover all of this because of the limited time. So if you already have a property and you were thinking of maybe remortgaging, refinancing, taking out a second charge and all of that, we wouldn't go into that because that is more bespoke. So we're going through first-time buyers, people who want to get onto the property ladder, and then anyone who's got any questions, if they're existing property owners, you can jump onto the question and answer situation, and then we find out what exactly your needs are. So you've been able to get a decision in principle. Now you ask yourself, what do I do with this decision in principle? Just go out there, register your interest with agents, because almost every agent will ask you, have you got a decision or agreement in principle? And the reason why they ask, at times it turns some people off. They're thinking, oh, how dare you ask me this? Don't you know, I've told you I'm an IT consultant, or I'm a this or that or that. Listen, they're doing their jobs, and they want to ensure that whoever they present to the vendor, as in the seller of this property, they know your mortgage situation. They know that you put things in place, and they will be able to help. Some of them even have in-house brokers. They will actually tell you, you need to be qualified by this broker. Even if you've got your own broker, it doesn't really matter. We just want to ensure that you speak to our broker, and our broker will be able to make a judgment based on the conversation they have with you. Essentially, what they'll be asking you is your income, your outgoings, and then use affordability calculator to just sense check to see if what you're saying matches what the sort of property that you're looking to buy. Yeah. So don't get too frustrated if they ask you where is your decision in principle. They'll be asking you to provide proof of deposit, and don't feel like they're trying to know too much. Yeah. It's their job to actually do this due diligence, so that at least once they present your offer to the seller, they know you've got a good chance of buying this property. Okay, so we've got to the stage whereby you're going out to look for properties. Again, you've got to be very, very careful. Once viewing properties, if you are novice, please speak to people who have been in this situation before. It could be friends, family, it could be maybe a builder or someone you know who can help. At times, two heads are better than one. So if you feel that you haven't got any experience in this, do it. Just get someone along, and then they can help you to make that decision. Yeah. It's worth noting that with some properties, or most properties, especially with houses, I would actually advise you to do something we call a home buyers report. Home buyers report, it just tells you more about the condition of the property, because what you'll be doing with your lender is a basic valuation. Yeah, we'll come to that shortly. So once you've seen your property, you like it, you put in an offer, the estate agents assesses your documents, everything, and say, fine, we think you're good. So they put your offer through to the vendor or seller, it's agreed, and they say, hooray, now you can actually get this property. So what then do you do now? So now you come to formalize things. So initially, you've gone to see your broker, they've done a decision in principle for you. But now we get to doing the real business. But most brokers by that time would have collected most of the information already. So all they have to do is just to tell you if give us updated documents. So just, you know, the decision in principle, most of the time it lasts for 3 months. There's a few lenders that would give you a decision in principle for 1 month only. So after 1 month, you've got to renew. After 3 months, you have to renew the decision in principle if you haven't found a property. The reason why they do this is because people's circumstances change. So they believe maybe after 3 months, your circumstances could have changed. So you need to do a soft credit check. So doing the decision in principle, you go through something we call a credit check. And with most lenders, it's a soft one, which means that once you go through that check, you would be able to know that you've gone through that check when you see your credit report. Other lenders will not be able to see that you've gone to maybe Barclays to check, or you've gone to Santander, or you've gone to Leeds Building Society, for instance. You'll be the only person who would know. There's a few lenders like Barclays and co who would do a hard search on you once you do or you go through a decision in principle. Okay, so you've seen this property, happy days, you like it, you've gone to see your broker, and then your broker asks you to now provide all the documents that you said you had, in terms of, like I said, most brokers would have collected these documents anyway. But if there are any holes you need to plug, for instance, they need the latest, and then they did it for you, let's say 2 months ago, they'll be asking you, can you provide the last 2 months as well? So it's really important that you let your broker know if anything has changed. So in between then, if things change, just tell them. Otherwise, you'll be wasting your time, wasting their time, wasting everyone else's time, because they will pick it up anyway. They would pick it up. So what I say to most people is that if you are in UK and you want things to go on smoothly for you without frustration, please watch your credit. If you can't afford anything, please don't take it on credit, because if you take it on credit and it gets to a time that you cannot pay, you will pay a very high price for it in future if you decide to take out a mortgage. Because what would happen is that instead of approaching high street lenders, you would now be faced with approaching lenders we call non-high street or subprime lenders. They're not prime. Prime lenders are normal high street lenders, normal household names that you know, the Nationwides, the Halifaxes, Santander, Barclays, all of them are high streets, the ones you can find them on the high streets. And then there are ones that you can't find them on the high street. You probably never even heard their name before. Very strange. These are the lenders that would deal with such clients, and you pay such a high price that you would wish that you had known this before. So be very, very careful when you have taken out any form of credit and you have to pay for it. If you are facing difficulties, immediately speak to whoever gave you that credit and see how best you can resolve this issue than getting something we call a default. Default means that you stop paying for something and you've defaulted essentially. And that's one thing too we call a CCJ, county court judgment, is when you have it could be anything. It could not only loans or credit cards. It could be parking fines, parking tickets that you refuse to pay. Even if you disagree, please contact the other party. Ensure there is a resolution. Some of the times they would even ask you to pay something. You can meet us halfway and then we close this. Otherwise, if it becomes something that has to go to the courts and a judgment passed on you, then you realize that it could be a really small amount, probably even under £100. I'm dealing with a client now that had a CCJ of £38, but because the CCJ is quite recent, under 6 months, and they wanted to buy a property, they're paying roughly about £150 more than what they could have got on the high street, only because they have a county court judgment of £38. So be very, very careful when you have credits in the UK. And if you take out a credit and you know you can't afford it, look for ways to settle it as quickly as possible. Okay, so now we've gone through the application. You would sit with your broker, go through the application. What I would also be talking to you about in terms of the application is what Mr. Oyinlola was talking about in terms of the insurance. I'll be directing you to see him because he does that aspect of things. I used to do it, but it's just gotten to the stage where it's just too much for me. So I direct you to him, but it's a conversation that we'll be having because like you rightly said, if you have taken this big mortgage, what if you can't pay? What provisions have you made? Some people have mobile phones, they protect it by taking insurance, but they cannot protect their own properties because you're working. And if you can't work, how do you pay for this mortgage? So you need to protect you yourself. Because if you don't protect yourself, you cannot even have the protection for your mobile phone. So it's really, really important. We'll have that conversation. And if it's something that I discover you've got a need for, then I'll be sending you to inside. Yeah. So we've done the application and things have gone well. You've passed, you've been accepted. So now you ask, what next? No, what next? So what is next is that I would have gone through the application with you and it involves a lot of things. We cannot mention everything here, but what the important things is what I'm going to be mentioning. So the important thing I'm going to be mentioning is solicitors' fees. These are fees, solicitors' fees, product fees, some lenders would charge a fee for the product. I'll explain it to you very, very shortly. So solicitors fees, product fees, and then at times valuation fees, again, depending on the product. And then we have the brokerage fee. I usually charge between 295 and about 1% of the purchase price, depending on the complexity or the type of mortgage that you're taking out. In terms of solicitors, I've got a panel of them, plenty of them. I could source solicitors for you, and then that's not a problem at all. That is one of the fees. You might probably be wondering how much solicitors fees would be. I'm just going to give you a ballpark figure. For a property of about 200 to 250,000, you're looking at potentially about 15 to 1,600 pounds. 1,500 to 1,600 pounds for solicitors fees. So the fees includes all the work they'll be doing, their charge, and then they'll be doing some searches and all of that for you. So that is the solicitor's fees. And then product fees, some lenders do charge a product fee, and they charge a product fee because they have rates that come that are a bit lower and some that are a bit higher. So you're paying a fee to get a slightly lower interest rate. So that would be my job to check for you whether it would benefit you to pay that fee or go for a product without a fee. We will do that, the maths there, and then you'll be able to realize that in your circumstance or in your situation, you'll be better off taking out a fee or not. So that is something that as a broker, I would be doing for you. Once we go through that, then the next stage is you asking, is every mortgage the same? No. We have schemes. So some people would have had council properties they would want to buy. So they would have the right to buy, which has been in the news quite recently. When you have a right to buy, again, you need to speak to your mortgage broker. Most people would have got a discount on there. We can use the discount as your deposit, so you don't have to actually physically put down any money for most people. The shared ownership schemes, which is part rent, part buy, just like the name suggests, shared ownership. So if you cannot afford to buy the property fully, then what happens is that you buy a share of it, a percentage. It could range between 25 to 75%. And then the other part you don't buy, you pay rent on it. But with shared ownership schemes, you've got to be very, very, very careful. That is where I would ask you to speak to a broker first, even before you commit to these schemes. You go there to these property developers or housing associations, and then they will ask you to pay a fee, like a holding fee, a direct deposit. Be very, very careful, because most of these shared ownership schemes would end up costing you so much. They're really expensive because you're paying a mortgage and paying rent at the same time. So just be careful or wary of that. Speak to a broker. Now we have, we've talked about the solicitor's fees, we've talked about the product fee, and then we've talked about a broker fee as well. So these are potentially the fees that you could incur. Then we talk about valuation, the property itself. Most lenders these days, for first-time buyers, they do valuation free of charge, and it's called valuation. It's not a survey. So the valuation that is free of charge means that the lender just wants to know that this property is good security to lend on. That's all. It's nothing to do with you. So they would actually advise you, if you wanted to know more about the condition of this property, do your own survey. And that is where I would come in and then tell you more about the importance of actually doing this home buyers report, which tells you more about the condition of the property. It's something that you're going to be having for years to come. So you need to ensure that you're buying the right product. So at times it's worth spending a bit more to do a home buyers report. Then you know that at least you've got something that for about 40 to 60 pages, it tells you, starts from the roof and then goes all the way down, tells you about the condition. So it's really important that you have that in place. So once you've done all of that, then the lender looks through your application and says, okay, fine, we're happy with everything. Then you get your mortgage offer. So mortgage offer essentially is telling you that based on this information you've given us, including what you've stated in the application, the lender is happy to lend you this money. So now solicitors would have started their work as well. So everything at times goes hand in hand. Some people, if they're not too sure, they would say to you, oh, you know what, I'm not too sure. So I wanted to ensure that I get this mortgage in place first before I speak to solicitors. But most estate agents will not accept that. They want to make sure that as soon as you say you like this property, the ball is set in motion. So they would want you to instruct your solicitors. Your solicitor will be talking to their solicitor even before the mortgage gets completed, because they want to ensure that you're committed to this. Solicitors will always ask you to put down a deposit before they start their job. And mostly it ranges between 300 to 400 pounds out of the 1,500 to 1,600 total amount I was talking about. So they want to make sure that you're committed to this and you put down some funds. Most brokers too would actually charge you their fee once you've done the application. And some of the times they can say to you, never mind, let's wait. You get mortgage offer, you're happy, my job is done, so you pay me my fee. Even though technically a mortgage broker would still be in the background, because solicitors might want to find out one or two things about the mortgage, or even you yourself as the applicant might come back to say, you know what, I've changed my mind. I don't really want this property again. I want that property. So can you cancel this application and then do a new one for me? So essentially, we will be there for you to hold your hand right throughout the journey until when you receive your keys. It's really, really important that you get a broker that is committed to do this. I know with some people, as soon as they get you the mortgage offer, that's it. You don't hear from them again because they feel they've done whatever they need to do for you. They've gotten your mortgage offer. So happy days for you, happy days for them. Move next. I don't do that. I make sure that I hold your hands right to the end. There'll be times that you even have to complete solicitor forms and you would need some clarity, even though the solicitors are there to help. 9 out of 10 times, they also use jargon and it becomes a bit daunting for you. So that is where your mortgage broker would have to help you to be able to complete those forms and then send it over to the solicitors. In terms of the mortgage schemes I was talking about, we spoke about right to buy. We've spoken about the normal mortgage that most people will take without any scheme. You're just buying a property 100%. And then we've spoken about shared ownership, which is part buy, part rent. There used to be a scheme called Help to Buy, but that has been discontinued. But if there's anyone who's got Help to Buy mortgage, if it's coming to after 5 years, you would have to pay back the Help to Buy part that you took. If there's someone here who has that sort of mortgage, please speak to a broker before 5 years is up. Then you'll be able to know what your options are in terms of repaying the government loan that you took. I'm not going to get too much, go too much into that. So essentially, this is how the mortgage looks like. So from beginning to end, if things go on smoothly, this is how it could look like. There could be times where there could be bumps, as in you being declined and then you having to say, oh, what is the issue? There are times that you probably don't even know why you were declined. It could be something you did years and years and years ago. You probably didn't know that it was something that lenders would decline you on. Some of the time, lenders will not even share that with brokers. If it's really serious, they wouldn't share that with brokers. So we would have to go through other means of checking to see the various ways that we can check. I'm not going to go into all of that. Hopefully, everybody goes through first time. But if there's any situation like that, based on individual, we have conversation, we'll be able to tell where this issue was coming from. But if everything went on smoothly, this is how mortgage looks like. There's one fee that is really, really important that we haven't spoken about. It might apply to some people, it might not apply to some other people, and it's called stamp duty. Stamp duty is essentially land tax. The tax you're paying because your property is on a certain land. So whether it's a flat or it's a house on a land, you would have to pay stamp duty. Now, in terms of properties, we have flats, which we normally know in a block flats. It's called a leasehold. When you buy a flat, you are buying the lease as well. Yeah, the lease is what you're buying. You're not a freeholder. A freeholder is someone who's bought a house sitting on land. The house is directly on the land. You are a freeholder. But when you buy a flat, you are a leaseholder. There are certain situations where you can switch from a leasehold to share the freehold. We're not going to go into that because it's a really complicated area for solicitors. And there's certain times that you buy a house on a land, but they would tell you it's a leasehold. Again, these are things that are legal issues. We cannot go into that for now. But it's just to give you a broad overview of what a mortgage is actually like, and how taking out a mortgage is really, really important that you speak to a mortgage broker. I won't go on too long, otherwise it gets too one-sided. I would actually leave the scene now for more questions. I think it's really important that I'm able to answer as much questions as possible rather than going on, because most people situation is different. Everyone has got a different situation. So I'm going to leave now. And then if you've got any questions, please feel free to ask them, and I'll be more than happy to answer these questions for you. Thank you so much once again for the opportunity, and hopefully we
Thank you.
catch up again. Thank you.
Thank you, Mr. Ken. Thank you. Thank you. What an amazing session. Please put in the comment section how you feel about this particular session. Let's know. Let's give him the fire emojis. So I think I should start from Mr. Abiodun. Let me bring him on stage now. I've got a couple of questions in the comment section, and I would like to read them out for you, sir, so you can answer them. So Temitope Taiwo has asked, I have a life insurance and my child who is an adult does not live in the UK. Can the child be my beneficiary using a trust? Over to you, sir.
Thank you. Yes, Mrs. Taiwo, yes, the child can be beneficiary irrespective of where they live. Though in abroad, yes, the child can still be a beneficiary. Thank you.
All right, thank you. Okay, another question from R. Can the payout be spread monthly for a specific number of years instead of a lump sum?
That's a wonderful question. Yes, there's a policy we call family income protection policy. So for anybody that wants the payout to be spread monthly, then they will not go for a life insurance, because life insurance pay a lump sum. But for family income benefit policy, then that addresses this issue. So it is possible, but rather than doing life insurance, then you go for family income protection policy. I hope, yeah.
All right, thank you. I
yes,
think those are the two questions I have on insurance. Any other question on insurance? I will bring you up again.
All right, thank you.
Okay, so I think the other questions are on mortgage. I'll bring Mr. Ken back on stage so he can answer some of the questions I have in here. So the Temitope is asking, you mentioned about credit card, credit score.
Yes.
So she's asking, what if I avoid taking a credit card together? Will that affect my credit score? Will it affect my chances of getting a mortgage?
A mortgage. Okay. So essentially the baseline answer is no. The reason why a lot of people will tell you, oh, it's good to take out a credit card, it's good to take, it doesn't really matter what sort of credit you take. The reason why a lot of lenders will give you, so let's put it this way. When you are applying for any credits, they score you. And the scoring takes information from various sources. It will take it from your voters roll. It will take you from how you conduct your accounts. It will take you from various sources. So essentially, if you've never borrowed money before, and it's your first time you're going to borrow money, and it's a mortgage for £500,000, then whoever is giving you this money they need something to hold on to. They need something to tell them about your past history of holding people's money, because essentially a credit card is not your money, it's the lender's money, and they want to see how, if you have other people's money, how do you spend? What is your spending pattern? Are you careless with your money, or are you very organized? So that is the reason why some people would say to you, oh, if you took out a credit card, it enhances your chances of getting out a mortgage. But essentially, it's not just a credit card. You could have gone to Caris or whatever, taking something on hire purchase, finance, it could be so far or whatever. It's a form of credit. So it's not just a credit card. So the answer is essentially no. So long as you have, it could even be a mobile phone contract. You've got something to say that, look, this person, when they have credits, they maintain payments, it should be enough.
All right. Thank you for that. So the next question is there an age that I can attain and then it's too late to take out a mortgage in the UK? What's the maximum age to take out a mortgage in the UK?
Right. So a lot of people again would say to you, is you're getting too old, you might not be able to. Let me explain this to you. There is no maximum, there is a minimum age, but there's no maximum age. So it depends on the individual circumstance. So the reason why a lot of people would say to you that, if you go too old, you won't get a mortgage, is because the term to pay the mortgage is shortens as you grow older. So for instance, if a lender says to you that I would give you a mortgage up to you are 70 years, some would say 75, some would say 80 years. So let's use 80 years as the baseline. I mean, come on, who would want to be paying a mortgage when you're 80 years? But lenders would give you, some lenders would say to you, never mind, I don't really mind. I know people do their things very late in life. So I would be able to give you a mortgage up to 80 years. So in that instance, if you were 66 years, it doesn't mean you can't get a mortgage. You can actually get a mortgage. It's just that you'll be lending into retirement. And so the lender would want to know what your plans are. What are your plans? Are you going to work late into retirement? What sort of job are you doing? So again, it is based on individual circumstance. I could go and get declined because of the job I do. Maybe I'm a bricklayer. They say, no, hold on. If you're in your 70s, even though I might be able to work, lenders would say to you, we don't think that as a bricklayer, you'll be able to work up to 80. Unfortunately not. But if you're, let's say, your solicitor or your office based, they will say to you, yeah, potentially you could still work up to 80 years if you chose. So again, it depends on certain scenarios. You understand? So I would never say to anybody, it's too late. The only thing is that once you get older, the term to pay the mortgage reduces, which means that you cannot borrow that much. So that is the reason why a lot of people say to you, oh, you're old, you won't get a mortgage. Yeah, so you essentially get a mortgage, the loan amount might be too small. So that's the explanation.
All right. So Dad is saying, thanks for your time, Mr. Ken. I want to know, does solicitors search fees, is it different from solicitors fees? So follow up on that. I'm in the process of applying for my mortgage and solicitors are charging me for solicitors search fees and solicitors fees.
Yes. So the solicitor fee itself is the fee is the fee you would incur for the work they're doing for you. And the search fee is fees they have to pay to third parties. So if this person was a dad, if you've checked on the quotes they've given you, they would have listed the searches that they would be doing. So some of them would range from council searches, bankruptcy searches. They need to check to see if you're bankrupt. They need to do an ID search on you. So all these searches, we call them disbursements. They have to pay third parties to do it. So that is different from the solicitor search fee. And the solicitor's fee itself, for carrying out all that work, they charge you their own fee. So their fee might be, let's say, 500 or 800 pounds. And then they would charge you search fees for searches, maybe in total 500. And then, yeah, everything 500 plus 1,800, 1,300, and they add VAT on top. So you're looking probably between the 15 to 1,600 mark. So that's the thing. So yeah, there are two different things: solicitors fees there, and then fees for searches. Solicitor searches fees is also another form of fee. I hope this explanation helps.
Okay, I hope so too. So, what are the chances of someone working as a part time and the spouse works abroad of getting a mortgage?
Again, it's a very, very broad question. It's not a question that can be answered yes or no. It would depend on, first of all, you're working part-time in UK, I believe this person is, and the person working abroad, where it depends on the country. What is their status here? Are they expatriates, for instance? Are they just it depends. So with such situation, you need to speak to a broker, and they would actually dissect the information you've given them, ask you further questions, and then even what this person is doing, what currency they're receiving their income in. So some people could be working abroad but receiving their income in UK bank accounts. Some people are even here, but then they've got accounts abroad where their income gets in. So this question is very difficult to answer, but essentially it's a yes question, but it depends on the scenario.
All right, thank you. So another question, is there any advantage to getting a mortgage after indefinite leave to remain over being on a visa?
Of course there is. Otherwise, yes, there is definitely an advantage, because then you have more lenders to choose from. Essentially, you have almost every lender to choose from, which means that you could always bet your dollar that you would get the best deal there is in the market. So I'm not going to complicate this. That essentially that is the reason why. Even though getting a visa, having a visa doesn't preclude you from getting mortgage. You're restricted as to the lenders you can approach. That's the difference.
Interesting. Okay, so thank you very much for the insights. Please, can my brother who lives outside the UK buy a property in his name here?
Yes, international. Yes, someone living outside the UK can 100% buy a property in his name in this country. Again, it depends on individual circumstance. It depends on the type of property they want to buy. If they want to buy it to let or want to buy to live in, it's not a straightforward scenario. We have to go into the intricacies of this to be able to advise how best this person can buy. But obviously, yeah, there's so many people in Nigeria, wherever abroad, who buy properties here. So essentially, yes, it can be done.
All right. So if he bless is saying it was very insightful because I didn't know there are many fees to pay and checks to do apart from depositing for a house for mortgage. Yeah. Okay. I'll come back to this. Let me just deal with everything mortgage. Then we'll go back to insurance. So about the credit card, please. Doesn't the higher spending of a credit card to a safe, reasonable extent show or prove that you can pay off your mortgage?
Not necessarily. Yeah. So if you see, a credit card is essentially it's a trap. It's a financial. You could be trapped in it. See, because the interest rates on credit cards are really high. So I always advise my clients that if you're going to get a mortgage, be very careful. Otherwise, you'll be trapped into using credit cards. It's a false sense of security it gives you. You feel you've got money, and then you use your credit cards, and it gets to a point whereby you realize that you're paying so much at the end of the month, but you only see it dropping a little bit because you're paying a lot of interest on it. So you've got to be really careful with credit cards. But it doesn't, if you spend so much on your credit cards, it doesn't give you an advantage. In fact, it gives you a disadvantage if your credit, for instance, is more than a certain percentage, and the ballpark figure is about 50%. So if you're spending more than 50% of your available credit, then it's a red flag to a lot of lenders. They think this person is probably spending above their means. They're relying on credit card instead of using their own finances. So I wouldn't encourage high spending on a credit card.
All right, thank you. So she's asking, how do we improve our credit scores if we don't use or spend a credit card, please?
You can use it. You can use it, but don't go too hard on a credit card. I mean, most people, even myself, what I normally do is I use it on a daily basis, buy usual stuff, petrol here and there, go to supermarkets, buy a few things. And then at the end of the month, I pay off everything. If I'm not able to pay off everything, I'll pay off about 80%. I know I've got just a little bit left because I don't really see why I should be paying interest on you've gone to buy groceries. Do you understand? Why do you have to pay interest on that alone? I mean, the whole thing has to be looked in with perspective because you shop around and then get the best deal. You're shopping around and say, oh, you know what? If I go to Tesco's, they have a better deal for this, blah, blah, blah. So you've gone there. Now you bought your shopping, £100. You use your credit card. At the end of the month, you don't clear this £100. Then interest gets added onto it. So why did you actually go looking for the best deal in the first place? So it's very, very tricky. What I would suggest you do is that if you have large spending to do, like plane fares and all of that, use your credit card because then you have protection. There's a protection for people who spend more than £100 on their credit card. If there's a dispute, then your bank would actually refund your money back to you. Anything below 100, they are not obliged to do it. But anything above 100, I would say, yes, use your credit card and then immediately pay it off. You don't want to pay too much interest on your credit card. So I hope the question has been answered.
Yes, it does. So his contact is scrolling on the screen. I'm going to bring up Mr. Abiodun now. I'll also share his contact details on the screen. So thank you so much, Mr. Ken. So, sir, I have a question on insurance. What if the person did not die, had no sickness, and lived to about 90 years? What happened to the payments made during that year of insurance?
I was expecting this question. Thank you so much. In the first place, the money so far paid has given the clients peace of mind. So just like the accountant will say, that money is spent already. The monthly premium gives peace of mind. I'm not worried at all for any eventuality if I die, because I know I've put life insurance in place. My family will not suffer. That alone justify the premium I pay. Now, as we know, for the insurance to pay out, the clients must die or being diagnosed with terminal illness within the policy term. So that is how it is. However, there's a policy that pays anytime one dies, even beyond age 90. And that kind of policy is called whole of life. The policy pays anytime. So if this person is so worried, what if I live beyond age 90? We always think we will live beyond age 90. And the fact of the matter is that most of us will not even live up to age 80. Now, but if this person thinks, what if I live beyond age 90? All the money that I pay will be lost. Then that person should go for a policy we call whole of life policy. Just like the name sounds, the policy pays anytime the client dies. I hope this answers this question.
Yes, it does. Any other question? I'm not seeing any question again. Zita, do you want to expatiate more on this about the question of working part-time? I thought Mr. Ken answered that. Oh, sorry. Okay, sorry, I think it's for Mr. Ken.
Yes,
Um,
do,
yes,
okay.
she's asking what are the chances of one working as part-time and the spouse works abroad. Yeah, you've mentioned that. You talked about
I
it.
think, yeah, I've mentioned that it's not, I cannot give a blanket answer without knowing the details. Do you understand? Even working abroad, there are some countries which have been sanctioned. There are countries that the due diligence we have to go through is very rigorous, and there are some countries where it's fairly straightforward. So again, it depends on so many factors. So it's something that you need to speak to a broker, or they can contact me privately, and then for me to give them advice is free of charge. So yeah, I'm happy to do that.
All right, thank you. Please send in your questions. Send in your questions. We still have some time left, and they are here to answer your question. I'm not seeing any other question, but I'm seeing some emojis from people saying how much. Okay, she says she's going to contact him. You can see the number. So the number scrolling at the moment is for insurance. I'll bring up Mr. Kenson too. If you have more questions, can you just drop into the comment section? Let's take as many questions as we can tonight. And probably if you are catching a replay, you have any question, please feel free to drop on the group. We'll surely pass it on to them and post the response back on the group. Yeah, this is very insightful. Yeah, so personally, it was so good to know that beyond the deposits, you still have some other payments to make, other fees to make. I'm sure people are just focusing on deposits. And so good to know that you still have the solicitor's fees and a couple of other payments that you're going to make. And for the insurance, it's good to know that as little as £20, you can start a life insurance for your family. And like a quote I saw that if you have spouse, if you have children, if you have people who depend on you, then you should get a life insurance. So guys, please, God forbid, is not a strategy. Nobody prays for anything wrong to happen. But should in case it happens, what's your strategy? What measures have you put in place to ensure that your children don't suffer, to ensure that everything works fine? So, in rounding up, who do I go first? Can you just give us your last charge for tonight? Since I'm not seeing any question, hopefully people will catch a replay, and once they have a question, I can always pass it on to you and get your feedback or your response on that. So, Mr. Abiodun, in rounding up, what's your parting charge for us? What do you want us to go home with
Thank you
tonight?
so much. I honestly want to appeal to everybody on the platform. Not having life insurance is a double tragedy when a loved one is lost. You face the tragedy of the loss and the financial consequence of the loss. And it is so annoying in most cases that people go to GoFundMe to be able to even carry out burial. I remember a couple of years back, this family, they stay in Croydon. This man died suddenly. He was a Uber driver. The wife, as at that time, was a trainee nurse. Nothing. So this man died suddenly. We had to form a WhatsApp platform to be able to raise money for his burial. Not only that, the woman is struggling raising about 3 children. It shouldn't be. For as little as £20, you could have provided an estate worth over 200,000 for your family. So that is my parting word. Thank you so much for having us here for this program, and I wish the group good sources in the future. Thank you.
Can I come in?
Thank you. Thank you. Over to you. So just before I let Mr. Abiodun go, I think someone popped in a question in the comment section. Can someone add this to appearance on life insurance?
This is a very complicated question. Adding as to the life insurer or as beneficiaries. I really want to understand what that person means.
I
Okay,
guess
let's
so.
assume that it means either of the two. You cannot add your parents on the policy. You can only add your spouse. Let's assume that there's a policy we call a joint policy that applies mostly for mortgage, where there's when mortgage is bought jointly. Now, then one other thing one could do is now add parents as beneficiaries. Yes, it's possible because the trust is more or less like a will. As the owner of a policy, you have the right to state who your beneficiaries are. Somebody, your parents, even somebody that is not even related to you. So it's possible. Thank you.
Thank you very much. Thank you.
It's a
Thank you.
pleasure.
Thank you. Okay, so Mr. Ken, let me bring you back on stage. Before
Yeah.
you say your final word, I think I have a question for you here. The
Yeah.
topic is asking, can you please explain more about what we need to pay stamp duty?
Okay. Can you explain more about when we need to pay stamp duty? So I'm just going to be very direct. You would be paying stamp duty when your mortgage is going to complete, as in when it gets to the stage whereby your solicitors would say, bring your deposits, and then let's collect the money from the bank as well to pay the seller off. That is when they would ask you to provide the funds for stamp duty. So you wouldn't pay it upfront. You would pay it when almost everything is done and you're going to be handed over the keys to your property. That is at that point where you'll be paying your stamp duty.
Okay, do you have any other question?
Any other questions?
Hold that off. Okay, thank you so much. I can't say. So over to you for your final words, sir.
Okay, so my final word. Mortgages can sound very daunting, but I always say to my clients, if you're going to live in the UK, please get a mortgage. You would thank me later for it because um, it's a mortgage in the UK. Apart from the fact that it serves as a home for you, it's also an investment, which it shouldn't be. But trust me, my mortgage is an investment in UK because of the way the property prices keep going up. So I say to people, if you can afford not to rent and get your own place, please do it because a mortgage is something that would bring so much returns in future. You'll be surprised, and you'd want to do even more. You'd hear people saying, I want to do a remortgage, buy another property, because it's so hard saving in this country. Like so many people, and even if you saved money because you're seeing the money every day, you'd always find a use for it. But once you have a mortgage, trust me, there's so many ways of making the property value increase. So I would trust everyone here to ensure that if you can, or if your circumstance is right, please get a mortgage. You will never ever regret it. So that's in effect what I would say to people here. And if you're a first time buyer, no matter your circumstances, don't be deterred. You need to start from somewhere. Speak to a broker who would guide you. I've been speaking to some people for 3 years before they had their mortgages. and it's so amazing. You've got to start somewhere. If you don't start somewhere, you would never know. Don't pay someone else's mortgage for them. Get your own mortgage and pay it off.
So there's a question here. Does the first time buyer need to pay for stamp duty?
Yes, again, stamp duties are graded. So they come in depending on the price that you're buying. Most people, I would say, if you want to take out a mortgage now, you'll probably be completing after April. So after April, unfortunately, the threshold reduces. And now I believe if you're buying anything under 425,000, you don't pay stamp duty. But after April, it reduces to 250,000, I'm afraid. So you definitely you will be paying stamp duty. Even as a first time buyer. Yeah. So long as the property price is high, then you will be paying stamp duty.
All right. Thank you. Thank you. Thank you, everyone, for being amazing guests tonight. And special thanks to our speakers, too. Thank you for your time. We do not take it for granted. And to my co hosts, Tega, thank you for doing this with me tonight. All right. So, just before we go, I would like to let you know that this program is organized by Parents Supporting Parents in the UK. And we are a community of parents, African parents. Basically, what we do is to provide a safe space for everyone in the UK where we share ideas, we share information, we collaborate with other seasoned speakers like what we have today, just to provide the necessary information required to not only live in the UK, to also survive and to also build a wholesome and healthy family. Like everyone would say, the reason why most people came to the UK is because of their family. You don't want to get to the UK and then lose the same family you relocated because of. So here in PSP, we provide our support. We share interesting content. I mean, you are free. You can post any question, and you're sure that you always get somebody to respond to your questions. So if you'd like to be a part of this group, this amazing community, here's the link for you to join. You can either scan the QR code or use the BIT link here. And please remember, you can only join with a UK line. That's just for safety and security purpose. And thank you everyone for your time this evening. And we'll communicate the next webinar to you. Hopefully, is sometimes in March. We'll be having another webinar. And if you have any other information, or if you'd like to contact any of the speakers, I have their email addresses scrolling down. And I'll also pull up their mobile too. You can give them a call, you can send them an email. Or if you're a member of PSP, I will definitely drop this. Stega will drop their contact details on the group also, so you can chat them up. Please feel free to chat them up, and they are looking forward to your call, your SMS, and to your email. And we'll call it a wrap tonight. Thank you all for being amazing tonight. Thank you for your response. Thank you for the questions you have asked. Thank you. It showed that you really followed the session. And I would say have a beautiful weekend, and enjoy the week ahead too. Thank you everyone for joining. Cheers and bye. Thank you. Thank you. Thank you. Thank you. Right.